The students and working accountants, welcome to my Smart Alley Prime YouTube channel. So now we are discussing about the provisions in the GST under GST relating to real estate projects. So in the real estate projects, we discussed one. I'm making 4 videos in 4 parts. The first part we completed. Now I will share the screen. You see here, for the purpose of understanding this one, the real estate construction or real estate projects, I divided into 4 parts. 1, 2, 3, 4. So just of all, we will take now we completed 1, then 3 and 4 we will take up in one video. For number 2, it is very most of famous. Mostly every builder will follow this one. So this will be very confusing and you have to understand very well. That is why one video you cannot make. It will take a lot of time. That is why for this one, at the end after completing this, at the end you will take up in 2 parts for this. This is the first one, second one, third one, fourth one. First one is builder purchasing the land and constructing the flats and for the purpose of sale, and he will sell. So he may sell after completing the construction. In that case, that is total amount will be paid after construction only. Then it is because there is no GST, it is exempted. And since there is no GST liability, so there will be no ITC. But the second one is sale during the construction phase. That is when the construction is started, during the construction itself, the residential unit, flat or anything, a residential unit will be sold and some amount will be received as advance, called either booking advance or simply advance. In that case, the construction after completion of the construction, the builder will collect the balance amount and he will hand over the house. In such a case, it is taxable and the tax is to be calculated on the total amount, advance paid as well as the balance paid and the total amount. For example, in this case, if the value of the construction the building is, that is the residential unit is 40 lakhs, total 40 lakhs will be paid at the end of the case after completion of the project, that is building, and the total amount will be paid and it will be handed over. But here, for example, 10 lakhs is paid as advance. And after completing the construction of the unit, that is the residential unit, the balance 30,000 will be paid and that will be collected by the builder and it will be handed over. In that case, the tax is payable on the total amount, that is 10 plus 30, total 40,000. You have to pay the tax. The rate is 5%, 1%, 12%. For I know we already completed the meaning affordable, non-affordable, affordable residential houses, affordable, non-affordable. For affordable, it is 1%, non-affordable, it is 5%. For commercial, it is 12%. Since in 2019, the tax rate for the residential sector of the residential real estate sector, the rates are reduced very much with the condition that there is no ITC will not be allowed. So for these 2 residential houses, that is affordable and not affordable, that is totally, then ITC is not available. In the other case, in the case of commercial building, that amount is 12% is the rate. I told net rate, total 18 minus 1/3 land. That's why. So 12% is the rate for the commercial real estate, commercial shop. So it is the full rate. That is why it is full rate 18%. For the land, 1/3 land value it is reduced. So since the rate is full, so ITC is, the builder is eligible for ITC. ITC means not on this. ITC means for construction, he spent labor charges, many labor services, he utilized inputs and input services he used. That is, inputs means cement, bricks, everything, sand, everything. And input services means that is the labor charges, that is carpenters, electricians, masons, everything. So on that amount, he can claim full ITC, he can claim. Okay, and then in this case, there are 3 rates. So in the case of commercial building, it is 12%. Sometimes I'm showing the rates here. 12%, 1% affordable, 5% non-affordable, 12% commercial buildings. In some cases, commercial real estate, commercial building also 5% will be charged. So that we completed. When it is charged, then the real estate commercial shop is part of the residential building. That means first floor is a ground floor or something. It is completely shops. And after that, first floor, second floor, third floor. So that is residential. In this case, this commercial shop is part of the residential shop. In such a case, since actually commercial it is 12%. But here, since it is part of commercial, residential housing, if the total carpet area will take up. So out of the total carpet area, that is residential as well as commercial, out of the total carpet area you are not understand, you know the meaning. Total carpet area, if the carpet area of the commercial shop or commercial unit is not more than 15% of the total area. For example, if the total area, that is carpet area, is 10,000 square feet, 10,000 SFT. In the 10,000 SFT, for example, the SFT of the carpet area of commercial house, the commercial house is 2,000. Out of 10,000, 2,000 means 2,000, that is commercial carpet area divided by total carpet area. 2,000 by 10,000 means it will be 20%. So it is more than 50%. Then the tax will be 12% only. If it is not more than 15, for example, 1,400 SFT is the area, carpet area for the commercial house. In such a case, 1,400 SFT, that is commercial area, carpet area, divided with total carpet area, 10,000, then that will be into 100. It will be only 1,400, it will be only 14%. In such a case, it is less than or equal to, not exceeding 15%. So it is only 14%. In such a case, for that commercial, that is unit, that commercial house or commercial shop, it will be treated as the part, it is treated as the residential unit only. It will be treated as residential unit only, non-affordable residential unit. So just like this, non-affordable residential house, 5% will be charged for the commercial building also. Okay, this one we finished yesterday. And now here, coming to this point again, yesterday we missed this, we went to that. Okay, in this case, for commercial area, it is 12%, there is ITC available. But for the residential house, whether it is affordable, non-affordable, 1% there is no ITC. There is no ITC. In such a case, if you are constructing a residential house, that is residential unit, so in this case, if that's commercial unit also, just like the previous one, commercial unit is part of the residential unit also. I told you, ground floor it is commercial, first floor, second floor, third floor, it is not. So here, what is the rate of tax for that? 15% of the carpet area of the commercial area, not exceeding 15% of the total area, then the rate will be 5%. Okay, here, this is regarding the ITC. In this case, we purchase inputs, that means cement, steel, bricks, sand, etc. Inputs, that is input is goods. Inputs and input services means services of the masons, labor means masons, carpenters, plumbers, electricians, all these services. So all these services will be, and we buy the services or goods, input and input services, and we use for all the units, that is commercial unit as well as residential unit also. So in such a case, we cannot divide how much is spent, how much is the expenditure, how much is spent for the commercial unit, that is one commercial house, and how much is for the residential house. Cannot be divided. Suppose if we maintain separate account, and what is the material and the labor, that is inputs and input services used for the ground floor commercial house, if it is separately maintained, so we know in such a case the ITC on that amount spent for the commercial house, that can be claimed in full. The ITC can be paid in full, claimed in full. Suppose if we are not maintaining separately, we don't know, it is undividable. That is, we cannot divide. So totally we are purchasing and using for the total using for all the units, residential and commercial unit also. In such a case, if it is not dividable, that is cannot be divided. In such a case, how to claim the ITC? relating to the commercial house. So for the residential house, there is no ITC. But for the commercial house, how much you are spending for that? We don't know. Cannot be divided. So how much you have to claim for the commercial building here? So in such a case, there is one alternative given. Follow rule number 42. Follow rule number 42. So what rule number 42 says is this. See here, we can claim only, we can claim the ITC for commercial only. But for this one, that is the residential, we cannot use. What it is, rule number 42 says is, first of all, claim the total ITC, that is called as common ITC. Common ITC is for commercial as well as residential. Total ITC you claim. You claim total ITC. You claim the total ITC. Where you will claim the total ITC? Go to GST, the tally plan. Go to the GST, where you are purchasing now. Getting ITC means purchasing and you are paying tax. That will be, we will claim as ITC. So you go here, I will take up one example here. Okay, so here, go to display more reports and then go to GST reports, go to 3B. Here in this, these are all given in this. If you want to total all the details, all F1. So all the details are given here. For purchase, it will be show as outward supplies. For purchases, it will not show purchases or inward supplies. It will say eligible ITC. See here, eligible ITC. It is eligible for input tax credit. In that, our total ITC, that is total input tax credit, call or simply common ITC means for all the build units, that is commercial and commercial and residential also. The total ITC, how you will get? So the suppliers to us, sell inputs and input services, suppliers, they are selling. They will file GSTR 1. So from that, we will get our purchases, that is our ITC, how much we get, that we will get into the auto-populated into GSTR 2B. From 2B, it will be auto-populated into GSTR 3B, into GSTR 3B. In this column, mostly, this is the ITC. So import of goods, import of services, these are different. So last one, number 5, 4A, 5. All our input tax credit, mostly all our input tax credits will be here only. Here, it will show the total ITC. So claim the total ITC. Suppose, I will give example. Total ITC, that is, give the total ITC is 1 lakh, for example. Total ITC is 1 lakh. So 1 lakh means claim the total ITC. So in that, the total ITC and the proportion is the total ITC is 1 lakh and the total carpet area is 10,000 SFT. 10,000 SFT. And then what it says, rule number 42 says, claim the total or common, total ITC. So for example, if it is 1 lakh, so all other ITC will show CGST 50,000, HGST 50,000, total 1 lakh. So CGST 50,000, HGST 50,000 share. So total, we are claiming this automatically populated. And then out of that 1 lakh, we are eligible to claim ITC on commercial house only, but not on this one. So what you have to do, you have to take the total and in that we will reduce the ITC for which we are not eligible. For which we are not eligible means for residential, we are not eligible for ITC. Out of this, for example, 10,000, how we will calculate? 10,000 SFT is the total carpet area. In that carpet area, we have to take as per proportion. Out of this carpet area, what is the share of commercial area? For example, total is 10,000 SFT. So in that case, 8,000 SFT is SFT, that is carpet area of residential building. And 2,000 SFT is the carpet area of the commercial building. So here, total is 10,000. Out of that, the carpet area, we have to reduce. What we have to reduce? We have to reduce the ITC for which you are not eligible. So we are not eligible for residential area, residential ITC. So in the residential is 8,000. And for the 8,000 SFT, we are not eligible to claim ITC. So we can claim ITC for commercial run. That's why in this, we have to reduce the ineligible ITC. So reducing the ineligible ITC means for 8,000, we have to reduce. So what it take is, so common ITC, 1 lakh, we will take up 1 lakh into to be reduced. So commercial residential ITC. So carpet area of residential house is 8,000. So common area, I mean the common ITC into to be excluded, that is residential carpet area. So residential carpet area 8,000. See, for example, the total is 10,000. Total is 10,000. Okay. So ITC is 1 lakh into, so 8,000 is the amount to be area to be excluded. So into 8,000 divided by total carpet area 10,000 means 80,000 is the ITC out of 1 lakh. 80,000 is the ITC relating to residential carpet, residential unit. So that is to be excluded. So 80,000 is to be excluded. If 80,000 is excluded, 20,000 is the carpet area of the commercial, and that we can claim ITC. That is why after that, 20,000, it will be 20,000 is 2,000 common area. So 1 lakh into that, if we exclude this, the balance 20,000 we can claim. So here, first of all, claim the total amount. Claim the total amount. So we will claim here 1 lakh, and the amount to be decreased is 80,000. It is to be omitted. So omitting means here, reducing means it is called as reversal. Amount is to be reversed. Here, next one is input tax credit reversal. Under this rule 42. Under this rule 42, we have to reduce how much? 80,000 we have to reduce. We have to reverse 80,000. 20,000 we are eligible. So 80,000 we have to reverse means reversal under 42. GST 40,000. GST 40,000. 50-50, 40-40 we reversed. Then it comes to net ITC available. Then it will be 50 minus 40, 10. 50 minus 40, 10. That means 10 CGST, 10 SGST. Total will be 20,000. We are eligible. That is 20,000 relating to the commercial house. We are eligible. So here we do. But we cannot do that. See here. We have to do like that. See, or we can do another way. That is wrong. See here. Instead of doing all these, in this input tax credit, which is automatically populated, you can hear 1 lakh total. In that itself, omit that, that is taking out, we can alter that to 20, 10,000, 10,000, 40, 40, that is 50, 50, it will show. So we should not alter that, show eligibility 10, 10, 10,000, 10,000, and the other ITC. In this, we cannot alter that to 10,000, 10,000. We cannot alter, should not alter. So total, show the total ITC 40,000, 40,000. 1 lakh is 50,000, 50,000. And in this, reversal will be 80,000 reversed, 40,000, 40,000 to be reversed. And the balance net ITC will be 10,000, 10,000 CGST and HST. Total will be 20,000 relating to that. So like this, we have to, like this, we have to claim total and then reverse the ITC, that is reverse the ITC relating to the residential area. How it will take total residential carpet area of residential area divided by total carpet area into common ITC. Total ITC into residential area carpet area divided by total carpet area. Then you will get that. That is the thing. So in that case, then it will be, we can claim, that is, we can claim the ITC on the part relating to on the part of the ITC related to commercial area by calculating as per the rule 42. So this is about this. So this we completed. For 4 we completed. 3 plus 1 is commercial area ordinary covered at 12%. In this case, part of residential project, not more than 50% of the carpet area of the total carpet area. Then it will be 5% only. And next one, second one is to take up it at the ending. After this is only both the landowner and the builder will enter into the agreement called as JDA. This person, the landowner, will give a right to the builder called TDR, transfer of development right. Right to make building, that is to construct. So the builder will construct will spend all the money, he will construct the buildings, that you will construct the residential units, you will construct all the residential units, and then both will share as per the agreement. That we will take up at that. Now we will come to this third one and fourth one. Third one is works contractor. In this case, he is purchasing the land and constructing. In this case, both are entering into agreement and TDR or the JDA. But here, the builder will not purchase the land, and the landowner also will not enter into joint development agreement. Simply, the builder, the landowner will ask the builder just to construct a building by spending the amount for labor as well as material. By spending that, he will give only construction service. So building land will be held by the owner. Land will be held by the owner, and after construction, the building also belongs to the landowner only. The contractor or the builder will provide only construction service. See, who provides, that is the person, the builder, who provides construction service without purchase of land, that is land held by the owner, and builder provides only construction service. This type of service is called works contract, working only for work only contract, that is building the construction. For example, landowner is having some 300 yards. In that you will ask, so you construct a duplex house. Okay, construct a duplex house and give it to me. By spending all the money, that is towards the material, towards the labor and everything. So here he will pay the expenses for towards material, expenses for the labor, and he will add some profit also. And then the total amount will be called as the value of the supply. So what is the supply here? Construction services he is giving, that is the supply. The value is the total amount. Services, service, that is labor, material, and some profit. So in that case, labor, material, profit. In that case, there is no land value because he is not giving any land. So there is no land value. In this case, rate of tax is generally for the works contract, it is 18%. It is 18%. So in this case, if it is commercial, definitely it is 18%. If it is commercial, it is 18%. And in this case, you know, already we understood what is meant by the affordable houses and affordable, non-affordable. If it is a affordable house, construction service is given to affordable housing. In such case, the rate will be 12% only. If it is non-affordable house or commercial house also, the rate is 18%. So affordable 12%, non-affordable 18%. Here you come here. Here, works contractor, commercial or non-affordable, it is 18%. It is 18%. Okay, so it is 8%. We complete it. And if the work service is given for a particular affordable housing, in such a case, the rate will be 12%. See here, 12% and 18%. Okay, so this is given. Okay, then now in this case, this is the maximum, that is total rate. This is the highest rate. That is why in these two cases, that is works contract for affordable housing, or works contract for non-affordable housing or commercial, the rate is the most maximum. That is why the builder is eligible for ITC. The builder is eligible for ITC. This is about the works contractor. Now fourth one here. Fourth one, labor contractor. What is meant by labor contractor? In this case, the landowner will ask the builder to supply only labor for construction. Material is not asked by him. Material will be supplied by the owner itself. The reason is, in this case, both material and labor are supplied or used, spent by the works contractor, that is builder. If you do the contract like that, the builder may use very less quantity, inferior quality of the material. Okay, in such case, to avoid that, what we say, I will supply the material. Owner will supply the material, best quality, and you supply only labor. So I will supply the material. So you supply labor and complete the work. That is construction work only, but only with labor. So here labor contract. That is called as labor contract. Only labor is separate. Here, labor and material using these two work is done. That is a work contractor. It is only labor. It's called as labor contractor. So here, then it says the builder supplies who only supplies labor. The builder supplies only labor. In this case, material cost is incurred by the it is labor, and material cost is incurred by the owner, means land owner. In this case, what is the rate? Actually, in the case of labor contract, the rate is always 18%. In the case of labor contract, in the case of works contract, commercial and non-affordable 18%. If it is affordable housing, it is 12%. But in the labor contract, it is always 18%. So it is 18%. But if the labor contractor does gives service for labor service only for a single residential unit, because just like I tell you, I have some land, so we'll ask the labor, I will supply the labor contractor or the builder, I will supply the total material, give the list. So I will supply the material, I will purchase and give the material. You supply only the labor and will complete the construction work for a single house, one duplex house you purchase, you make. So in this case, if one single residential unit is constructed under labor contract, then it is exempt. So I know already, I told you in the 2017, 11/2017, notification, they gave the 1/3 land, and that is the rate is 18%. In the case of land value minus land value will be 12%. For both commercial as well as residential also, it was 12% in 17. In that case, next notification number 12, that is 11/2000, it is 12/2017. In this notification, this what we call labor contract for a single residential unit is exempt. So for this, no tax. All our case means not single residential, more residential units, then it will be 18%. You see here, 18%. Okay. And then here, what is meant by single residential? I told you, one duplex house, it is single. Sometimes I will ask him to build the house, but it will have 3 floors. It will have 3 floors. One floor I will stay, and another floor my children will stay, and another floor I will use for any guest, or I will rent it out. But it is treated as residential unit, single residential, since it is treated as when the landowner is the owner of all the floors. The total house, the owner, that is landowner, will be the owner of the houses, all the floors. In such case, the whole house, I am the owner. In such case, it is treated as residential, single residential unit. If the works contract is taken for many apartments, then the apartments means different people will be owners. That is like in the case of many apartments, in such case, are commercial also. Commercial or many apartments, not single unit, many residential units. In such case, it is 18%. Okay, so this is about the total about the residential sector. The first one, third one, and fourth one. We completed. Okay, so what I do is you follow that from the beginning. First you see video one by one. In the middle, if you see, you cannot understand. From the beginning, one, then part number 1 video. Next, these two, part number 2 video. And then this will be in 2 videos, 3 and 4. Like that, part wise you see, and the whole video you view. Otherwise, you cannot understand. Okay, this will take a lot of time. There is a lot of confusion also. That is why I will make 2 videos for this. Part 1 video for this both. Part 2 video we completed now. And in the next video, next 2 videos, we will take up this one. That is builder entry into agreement with the landowner. That is called a joint development agreement. The landowner will do the right, TDR. That means transfer of development rights. So in that, the total expenditure will be met by the builder, construct the buildings, and in the agreed ratio 40/60. So he will take 60 and he will give 40 units, 40 flats to the owner. Like that. And the owner will sell his share, and the landlord, builder will sell his share. So what are the different obligations that we will get? Okay. So this is about this one. So I will ask you to see the every video till the end, and if it is good, you like it, and then every person visiting my channel, please subscribe to my channel and click the bell icon and click select all. You get notified for all the videos, and share my channel with all others. And one more thing is, I am running paid online classes also for Tally, GST, etc. If anyone is interested, you can contact me and you can join the classes. My mobile number is given on the thumbnail. Okay, so with this, I close this session, and thank you and all the best to you, and good night. We will meet in the next video. Bye.